Hi, I'm Jules, and you're watching Catalyst Plus TV, the place to be to make more possible. Today I would like to talk about a subject that isn't the most exciting subject, but it is something that we all need to do, and that is your personal tax return. Now, if you're going to a new tax agent, there's a few things that you'll want to make sure that you take with you. The first of which is going to be your tax file number and hopefully also a previous tax return. Now, the main reason why you want to take a previous tax return is if you've claimed deductions that need to be rolled over into the new year, such as depreciation, you'll need to have all of that information with you, and you can only get that from the previous tax return. Other things that you'll have to bring along with you are your payment summaries from your salary and wages, any dividend statements, and your health insurance statement for the year. But what other things might you be able to deduct to help reduce a little bit of the tax that you've paid through the year? If you're a salary and wage earner, you're usually quite limited. However, there are a few things that you might be able to deduct. One common deduction is if you've donated money to a registered charity. Generally, if it's over $2, you'll get a receipt for any money that you've donated. Another thing is if you have to wear a uniform or protective clothing, you can either claim a laundry allowance or laundry receipts. But be careful. It doesn't necessarily mean you can claim dry cleaning receipts for your suits or anything like that. It has to be a uniform. A uniform is defined as clothing that you must wear that is designated by your employer and has the logo of the place that you're working. Generally, dry cleaning of suits are not deductible. Laundry of uniforms such as protective clothing for a chef, the chef uniform, or for if you work in a trade or in the mines, then yes, there is a laundry deduction that you can claim, whether or not you have actually taken your washing somewhere else or there is an allowance that you could apply for. Other deductions that might be possible for you are things like your telephone bill. Bring those along with you for the last 12 months, but ensure that you've got at least 1 month or 4 weeks where you've highlighted your bill, figuring out which part is for business and which part is for personal. The percentage usage will be the percentage usage you can use for that financial year. Again, it's imperative to keep a copy of your records. Other deductions that you might be able to claim are work-related assets that you've purchased. So if you're a tradie, it would be your tools. If you work in an office and you're doing some study, you might be able to claim some of your computer purchases. But again, you have to figure out how much of it is really for business or earning your wage, and the portion that is used for personal use, so playing games and stuff like that. If you get an allowance from your employer for using your motor vehicle, you might also be able to claim a portion on a cents per kilometre of business-related use. You have to be very careful though that you've kept a logbook and you also know the portion from business to business. You're never allowed to claim from home to your first point of business. So if you're a travelling salesperson, your first call with a customer from home to that customer would not be a deductible expense. However, from that first customer to the second customer, that would be a deductible expense. Again, it's best if you've already got an allowance from your employer, and you can also show the logbook. Another question that we often get asked about is home office expenses. If you own your home, it is probably likely that it is better for you not to claim home office expenses. This is because the portion of the space that you're claiming, so say you're claiming 10% of your property value and 10% of electricity, that will mean that in the future when you sell your home, there will be 10% of any profit that you make that will be taxable because you've claimed a home office expense. Generally, it's better off for you not to claim that expenditure. If you're renting, it might be a different situation for you, and that's something that you should really discuss with your tax advisor. So there you have it. There's just a couple of ideas for you for your personal tax return, and we've also created a checklist for you, which you can download at www.catalystplus.com.au, and there we'll be able to help you figure out what you should take to your tax advisor, what kind of deductions may be available to you, and how do you get the best result from your tax return. I really hope this was of help for you, and if you think that it could help others, please share on social media, because we love to help other people as much as possible. In the meantime, have yourself a really great week, and we'll see you in next week's episode of Catalyst Plus TV.